This morning, I shared a trade update on a position that I took on the dollar against the Swiss franc inside of our Telegram channel. And I just wanted to mention that if you're not already in our Telegram channel, it is completely free to join. The link is in the description down below. So the NASDAQ and the S&P 500 are lower today. NASDAQ down by 1.8%, actually a pretty good size sell-off here to start the fresh week. And this is, by the way, following the sell-off that we saw on Friday. So Friday, kind of big sell-off, then a little bit of a bounce, and now rolling over, selling once more, lower here on the Monday open. And very interesting considering this is kind of the last trading day for the whole year for the stock market. Same thing with the S&P 500 down 1.65%. And if we zoom in over here, you can see XLY. This is the consumer discretionary ETF. This is the one leading the markets lower. Now, consumer discretionary, this is of course the part of the market that sells lots of different goods and services to consumers that is more discretionary, as the name would entail. These are things like Nike and Amazon and Tesla, basically opt-in spending, which has done really well recently, but also pulling the market down today. Software companies, as shown by the ticker symbol IGV, the software sector ETF, lower here today by about 2% as well, and technology also dragging the broader market down 1.7. And we can see at the same time the dollar index seemingly finding support, pushing right back up near that high of the year, 108.5. Big push in the dollar index, and this is kind of the story here recently that I wanted to get into in this video. We still see overall, despite yields being down today, the climb in the US 10-year yield. Now, what does this mean? And if you're somebody who trades currencies, gold, or indices, all of those things are very much impacted by this chart. Rising yields suggest a few things about what the bond market thinks is happening with the Fed and the economy. And the first easy point is, of course, inflation. When the bond market thinks that there's going to be more inflation in the future, they demand higher payments on the bonds that they're going to buy. Now, yields represent how much you get paid as a bond holder. So this rise in the 10-year treasury is very interesting, considering right around when the Fed actually cut interest rates, yields then proceeded to go up. You would think it would be the obvious opposite. They actually traded lower before the Fed actually cut. And then once they actually started cutting, the bond market has actually started to say, you know what? Inflation could be coming right back. And we don't think the Fed's going to cut rates that much further. And the second point would be that the economy in the US is looking pretty dang strong, especially compared to peers, making the US dollar even more attractive than, buying perhaps the euro or the pound or the yen. The US economy looks very strong. Foreign investment is flooding into the US. And again, with Donald Trump returning, there's this fear that there could be the tariff inflation, but there's also this concept of, well, the economy is expected to be, as it has been recently strong, continue to be strong. Meanwhile, you have other places that are struggling, makes the dollar even more attractive. And so there's this concept of, stability in the region to a degree. And so interestingly, we see yields flying high on these two potential prospects. Now, I know that was a lot of bond theory, but what does that actually mean for things like gold? Well, it's depressing the price of gold, right? The dollar index being up so much is just a byproduct, in my opinion, of yields being up so much, right? The dollar is strong off of the back of yields being very strong as well, in my personal view. So what that means is that the bond market actually thinks, well, the Fed's not going to cut rates that much next year, which is sending the dollar higher and putting pressure on the metals as well as stocks right now. So just how far can this dollar index actually go? Well, it seems pretty clear that we've broken through this key level of resistance. If we take a look over here and over here, these were key levels of resistance for this chart. And then now the question is, are we actually going to make a move back to this previous high that we saw in October of 2022? And this starts getting me a little bit nervous, because if you see a dollar index rise like this again, what actually came with this? Well, pretty much everything else sold off super hard. Bitcoin, stocks, other currencies, everything got crushed except for the dollar. So do we want that to come back? Maybe, depends on who you ask, but for me, not really. That would be a really tough time. And again, it would bring me back to dollar dominance, but I don't really feel like that is where we're headed right now. That being said, if inflation does start to tick up again, we have to keep an eye on this because, again, it could mean the dollar continues to uptrend, and essentially that means everything else downtrends, like the euro, the pound, the Kiwi dollar, and the dollar CAD, which is trending down for the CAD but trending up for the dollar, the Australian dollar, right? We see all these different currencies really getting hammered against the dollar right now. So gold is in this weird position because it's seeing other currencies weaken, which is good for gold, right? Purchasing power of currencies declining, or fiat currency in general doing poorly, is good for gold. However, the dollar's dominance and very, very strong kind of positioning amongst other central banks, it looks like that's going to keep the price of gold muted for now. We see key resistance up around 2,700 and key support around this 2,560 to 2,580 range. My big thing that I keep saying on this channel is if we actually start to break through support, then watch out below. And if we actually can take through the highs, then perhaps bulls are actually back in control. But right now we are just very neutral on the metals. Now on to things that I'm not so neutral on. I have a bullish reading on the Bitcoin chart, NASDAQ as well, Nikkei, dollar CAD, and by the way, just in general, dollar crosses are getting some positive bias on the edge finder. Now, if you don't know what you're looking at, I'll explain in just a second, but we're also, you can see here, getting some bearish readings on Kiwi dollar, the Australian dollar, pound dollar, euro dollar. And for the currency traders, let's really lock in here for a second. If I go category and actually select major currency pairs, yes, there it is. Pretty much all bullish dollar stuff, which is really interesting considering it's been a while since we've had a signal like this from the edge finder, and it's been quite accurate overall to be very bullish the dollar in recent times. So I mentioned I'd explain what the edge finder is. The edge finder is a data sourcing tool built by my company, A1 Trading. We build all sorts of different sentiment indicators like the put call ratio, retail sentiment, COT data, and of course we have a top setups algorithm, which kind of strings together everything. So we look at sentiment indicators, like I mentioned, the commitment of traders data, retail positioning. We also look at technical indicators like seasonality and trend of a particular chart, and of course, economic data, which makes up a bulk of the edge finder scoring. Because again, this is where retail traders really struggle. They don't really have a great grasp on fundamental analysis, like the GDP growth of the United States versus other countries, retail sales, which shows the state of the consumer, how much are they spending out there, inflation, which shows, of course, a very important metric for central banks, whether or not they're going to cut rates or raise rates. This is all stuff that is incredibly important and many retail traders completely overlook, though these are the things that guide the currency market trends, or if you're into indices and gold, of course, those things are heavily impacted by the fundamentals. Usually we offer 30 days access to the tool for $199. But today and tomorrow we are offering half of this just for a short period of time to allow traders who are interested in our tools to try it out for 30 days for just 99 bucks. If that is something that you're interested in, click the first link in the description to speak directly to a member of our support team who can set you up with a 30-day trial period for just 99 bucks. Oh, and by the way, that $99 that you'll pay is credited towards your final purchase of the tool. So it's a great way to try out the tool and not lose out on anything. So what I've just done is come back to the edge finder and remove minor currency pairs. And this is my current full list of things that I'm watching. So I already have a long position on the NASDAQ and Bitcoin. And I actually just closed this morning a profitable trade on USD CHF. Dollar Swiss looks really, really good. And I've been really bullish on the dollar. So this was pretty awesome to see. Hit 104 pips on USD CHF. And I know that's not a huge number, but dollar Swiss franc is a really slow moving currency pair. It's actually why I really like it. It actually, the low, movement, while some people chase that volatility in currency land, I actually like to dollar cost average on low moving currency pairs. So I was able to get a long position on dollar Swiss. And when it popped up this morning, I was able to send out the alert that I just hit my target on the position, which was awesome. We also have a bullish reading on US oil. So I'm going to keep an eye on that one, especially with that chart looking kind of primed for a possible breakout. Let's actually go look at oil. So oil is breaking its first key level of resistance right around 71.5. I'm really curious to see how we close here. If we close like this, it's very possible that we head up, test 73. The really big milestone for me would be a break above 73, maybe tag 74. And then I'm just looking for bullish continuation on oil prices. And while we're on the topic of commodities, check out natural gas, up 15% today. And I guess it's on cold forecast, basically, which of course natural gas demand can rise or fall dramatically based on weather predictions, weather forecasts. So I mentioned I'm bullish on Bitcoin, but price action is not looking great right now. If we actually take out this level of support, I'm going to go ahead and stop out of this position that I have and just take a small loss and move on. I bought into Bitcoin thinking that this support level would hold, and it did initially. I was up nicely on the position, but it has since rolled over. And again, if it wants to break this support level at 92.5, then that's going to go ahead and be my cue to just stop out and move on. And a very similar story for the NASDAQ. I've been very bullish on the indices. Price came back to this area. I caught a little buy entry. But it has rolled over very quickly here. And if it does take out those Friday lows from last week, then that's going to be my cue to actually take a loss on this position. I actually have a lot of cash sitting on the sidelines. I use a stock brokerage, which is linked in the description down below, by the way. But on my account, I have a good bit of cash sitting on the sidelines. What that means is that when you're in the stock brokerage world, you buy shares of something. You don't do lot sizes or contracts, you buy shares. And so, every share is a certain amount of money. So I'm actually trading QQQ. So I have a QQQ position and it's $500 per share, let's call it, right? So I have money in the account, and then I take that cash and I deploy it into something like QQQ. But right now I have a good bit of cash still waiting to buy more shares if it actually drops. So I've marked up the NAS 100. If we take out these lows, like I said, I will stop out on this position, but I'd look to potentially try again should we go lower down to like 20,400, 20,000. So I have a couple ideas lined up for the NASDAQ if we see lower prices. The S&P 500 is also really close to tagging a key level of support, and same thing, by the way, with the Russell. The Russell is near this key support around 2200. I actually sold a put on IWM. For those of you that are familiar with options, you know what that means, but if you're not super familiar with options, basically I sold a bearish bet to someone else. And if you think about what I just said, I sold a bearish bet to someone else who's bearish on IWM could potentially, try and bet that it's going to go lower. I sold them that bet. So I collected a premium for selling that bet, and that premium was about $1,400. And feel free to pause the video if you'd like to read through this, but basically I sold a put, $1,475 is how much I collected on this trade. And basically if the shares drop, I have to buy them. And if they don't drop, then I just keep the $1,475 and move on. By the way, even if they do drop and I get assigned, I still keep the $1,475. That's the cool thing about selling options. You basically get paid up front for the trade, and it's kind of awesome. But it's something I've done for some time, and it has really helped to smoothen out my overall equity curve. By the way, if you're looking for a better brokerage, there are several linked in the description. All of them can be traded directly on TradingView, and depending on what you're looking for, if you're looking for a Forex brokerage or if you're looking for a stocks and options brokerage, all of it is linked down below in the description. Those are referral links, so if you choose to use them, you'll be supporting my channel, and I really appreciate it. And there is something also in it for you. Several of the brokers linked down below in the description have great special sign-up perks for my audience. So you can find out more by clicking the link in the description below. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.